Futures versus options. With 1 day of trading activity, 2 different trades, I'm going to show you why the options are far better as an instrument to trade the futures market than the futures. What you're looking at here is the day's activity of September the 6th, a couple of weeks ago, Friday, when the monthly unemployment number was released. We were trading the weekly options that were going to expire that day. We do it every week. Firstly, we have our levels in place. We have resistance at 64. We have support at 42. We have a balance point area at 54. Right here at 8:30, the monthly unemployment number was released, and it was less than what was expected. Bearish. Program trading activity continued to move the futures to the upside, very steadily up. Right up in here to our resistance level, put in a formation, and we started to measure program trading activity to the downside come into this market. And we were starting to trade these puts, trying to buy them, between $60 and $1.25. On average, we bought them for $1. So now let's pause for a second and see what that means with regards to the account. The multiplier on the options to the futures is $50. So for every 1 point that you buy an option for, it's going to require $50 from the account. So for every contract that we were able to buy, there was a risk of $50 to participate in the futures market. Now, you can do that with a future, but that just means that your stop on that futures contract, on that fill, can be no more than 4 ticks. You can't trade these futures markets with a 4-tick stop. They'll take you out every time. So what happens here? I buy these puts and this starts to go against me to the upside. What's the worst that can happen? I lose $50. I was buying all that I could in here for $1. A little bit less, a little bit more, but for the most part, $1. The market started to make its way to the downside, and by the way that we present the data with our bars, there was no real reason to get out of this thing. We were looking at a potential balance point here at 54, because if we look back, all day Thursday, we just oscillated above and below this area. So this area was significant to this market. But it never slowed down past it. Sliced right on through it, went right down to support here, and we were finally able to execute off and close out this position that we bought on average for $1 between $5 and $6. So for the initial risk that I placed on the account for $50, I ended up with $300. Saw momentum really start to dry up here at support and started to see buy programs come in here in the market, both on the futures and on the stock side. I did the same thing, a mirror image in reverse. Started buying these calls, these 1660 calls that were going to expire within a few hours. Started buying them in here with the idea that we would at least get up to this balance point here. That's what I was expecting for the trade. That was the initial target for this trade. And I could make between 40 up to 1654. There's about 16 points there, 14 points on the S&P. We went right up through this area, started to make a little bit of a retracement down, not enough to get us out, and went right up to 64, right up to resistance. We were able to sell these and close these off before expiration between $4 and $5. So we did the same thing again. We had the same amount of risk onto the market. We were trading this futures market with the equivalent of a 4-tick stop on the futures. You can't do that with a futures contract. Like I said, there are programs out there that are just waiting for you to do that. The reason I trade the options versus the futures on the futures market is because the risk to reward is very similar to what I just presented to you here. The levels are the key to making this work, because you see finally at the end where we had this balance point, when this market finally settled, it was in and around that area. These levels are very important to pay attention to. So as you take the demo and as you get the daily morning update in the morning, post those levels onto your screen and watch these markets trade at them. Like I said, it'll take more than a couple of days for you to start to believe it. But undeniably, these levels have a presence in the market that this market pays attention to.